Hi world, welcome back to my channel. This is Rutzel and here we are again. We need to talk about money and life. So my topic for today is what are the things you need to do first before you invest retirement. So maybe you guys will always said, why is it Rutzel is always talking about retirement? My channel again is about money and life. So it means life, not only the life today, but a life in the future, which is our future. We face the reality is retirement. So I put the title here is Road to Invest Retirement. That is the title for today. I have here 6 step by step before you invest your money. First one is pay off your credit card, pay off your loans, pay off your debt, except mortgage. Okay, if you have a student loan, try to pay that off first. Because why? It's useless to invest your retirement if you have a lot of loans, debt, and credit cards balance. Because maybe your investment grow or have an interest or from dividends or from growth, but you have also a debt or loan that have a more than interest you owed from credit card or from student loans or car loans. So what you will do, guys, I know there's a baby steps by David Ramsey. Actually, I did not really watch all those because I just watching some YouTubers and learn from everyone, not really focusing on one YouTubers. That's why I start my investment. But this is my own way, or this is the thing that applied to me before I invest my money. First, I don't have loans, so I'm good at number one. But if you guys have that, please try to pay that off first before you start investing, because it's useless. It's useless that you earn money from dividends or from profits or from gains or from returns, but you also have paying interest from your debt or the credit cards. So pay that off, please. Please, please, please. Um, the strategy of doing that is I have the 30 ways to cut or to stop buy things to save money, and whatever you save in there you can pay that to your debt. An example, you have a student loans or student loans, car loans, or credit cards. Example, you have 2,000 debt on your credit card, and your minimum amount for that payment amount for that month is only 35 out of 5 for 2,000. No, don't pay just the minimum. Just pay like half of it as possible, or um, because you're paying interest, guys. I really don't know how much is the interest, because the truth, I have 7 credit cards, but I never paid interest, because every end of the month I make sure I will pay for it. Again, I will not purchase anything that I know that I cannot pay at the end of the month. I have already my credit cards for more than 3 years, but I never have or had paid any interest to my credit card. So I really don't know how the interest works, because I did not experience that. But I know the moment you will only pay minimum of that month, you are paying a lot of interest, and it's useless to invest if you have paying interest on your debt. So I just advise, if you have like a multiple debt, please start the one that is highest interest and try to pay that off, and maybe pay the smallest balance until it paid off, then go to the next credit card or next loan until everything is paid off. I have 30 list of how to save money, and in every video I discuss 10, so there are 3 videos for that one. Try to watch this, maybe it gives you an idea of how to save money so you can pay your debt or credit cards. So that is my first. My second is, this is connected to my first. Always know your needs than wants. So by knowing what is your needs and what is wants, and you will stop buying your wants and then put that to pay your credit card. It's really help, guys. It's really do help. Even I did not have a credit card, but based on my study, it really helps. So you have to know what is your wants and what is needs. Needs is things that you need to live life. Wants is the thing that you can live without. So that's my second one. My third one is, this is also connected to number 2 and number 1. It's for you to know what things that you need to stop buying. Is you have to make a list of your expenses every month. Or I have my Excel file. I monitor all my expenses from the smallest expenses to the biggest expenses. I have that monitored. By doing that, you know exactly what are the things to be controlled or not. If you know that this part of things you spend a lot, and if you think you can cut that off, or like just minimize of spending that part of your expenses, that will help. It will add money to pay your debt, to pay your loan. Kung sa Tagalog pa, mahirap umahon pag lubog ka na. So huwag niyong antayin na lumubog kayo. So that is my third on my list. So my fourth is save an emergency money. So first, you have to pay your debt. Second, you will always know what is the difference between wants and need. Third is you need to make a list of your expenses so you will know what part of the expenses that you spend a lot, and if you can control that one to save money to pay your debt. My fourth one is to save an emergency. So you have to save an emergency. This said you have to save an emergency for 3 to 6 months. Why you have to save your emergency before you invest? Because it's useless. If you invest money and then after 5 days you have an emergency, your car broke down, you need to go rush to the hospitals. I know maybe you have an insurance in your company, but still there is another expenses out of insurance, a copay. They call that a copay. If you have no emergency money, the tendency is you will get your money from your investment. And if you will invest your money in a retirement, there is a penalty and interest when you get that money earlier than 59 years old and a half. As possible, don't ever do investment if you don't have emergency money, because the tendency is you will just withdraw your emergency money. I know a lot of people, I know a specific person, but that withdraw his retirement, and he did not know that he need to pay penalty, 10% penalty. All he knows that he only paid the tax, so he paid the tax when he get his retirement, but he did not know that there is a 10% penalty. You know what, guys? After 3 years, IRS sent that person a letter that he owed 32,000 US dollars. That's really painful. I know exactly that person. So don't ever do that in your investment. And before you do things in your investment, you have to study, research, ask what is the consequences if you withdraw earlier than 59 and a half. Fifth on my list is 401k. 401k is a company-sponsored retirement. So it means only employed people whose company offered 401 can have this retirement. So that's why I put on the fifth. It depends. So if your company offered a 401k, but your company will not match anything, so I will put this on the 5th on my list. But if your company offered a 401k and they will match every dollar to dollar or a percentage of your salary, like my company offered 6% of my salary match for my 401k, it means 6%, they will deduct 6% of my gross income every paycheck, and they will match it like as it says. It's like one example, 1,000, my paycheck is 1,000, they will deduct me $60, that is 6% of 1,000, and they will match $60 as well. So $60 from my paycheck and $60 from the company's money, put it together, and they will contribute that to my 401k. That is what match means. So if your company offered a match to your 401k, you have to put this 401k as number 1 before paying credit cards. But if your company offered a 401 and they will not match it, you have to put it at number 5. You have to pay your debt first before you start investing. Again, if your company offered a match, put the 401k on the first. You have to contribute the 401k first before paying your debt or your credit cards. Why? Because there is a free money. If the company match, there is a free money in there. Don't ever say no to a free money. So that is my 5th, or the baby number 1. Okay? So my 6th on my list is open an IRA or a Roth IRA. So a Roth IRA or IRA, that is an individual retirement account. So it means anyone can open it as long as you're 18 years old and you are earning money. Like earning money, you're employed. But if you are like earning money and under the table, you're not paying taxes, you're not allowed to, you're not legally allowed to contribute IRA. So that is my 6th of my list. And I have a video of that one. Why? And what is the difference between IRA and Roth IRA? The Roth, what is the bit in between in that one? I have a video of that one. You have to watch. I will release that soon. So that is my 6th on my list. The 7 is if you already pay your debt, if you already know what is wants and needs, you save money to pay your debt, and you already monitor your expenses. And again, you can save by doing that. And then you save for an emergency. You have already your emergency, and you have already your 401k, and you already max your 401k, and you already have your IRA, and you max your IRA, and it's time for you to invest in brokerage account, individual brokerage account. It means that investment you can withdraw anytime. So anyway guys, the 401k and the Roth IRA, or the 401k and the IRA, either Roth IRA or IRA, either 401k or Roth 401k, that is a retirement. So it means you can only withdraw that when you reach 59 years old and a half. But there is ways how to withdraw the Roth IRA. You can withdraw all the money that you contribute, but not the growth, or not the dividend, not the profit, only the money that you invested. But that is a retirement, guys. Whatever you put in retirement as possible, don't withdraw, please. And that's, if you have all these things, it's time for you to invest individual account. So individual account, it means it's like just a normal investments. You can withdraw anytime, but there is also like a tax on that one. But you have to know the long term and the short term. What is the difference between on that one when it comes to taxes? So there's another video for that one, for me to explain you guys what is the difference. Now I have to summarize the road to invest retirement. First, pay your debt, pay your credit card, pay your loans, except mortgage. The second is you have to know the difference between needs and wants. Because needs, you have to buy it, you have to do it, but wants, you can stop doing it. That's a once. And instead of buying all those wants, you can save that money to pay your debt. The third is make a list of your expenses so you will know and monitor in what part that you really spend a lot. So maybe you can control it and you can cut it, you can stop it. So that's my third one. The fourth one is save for an emergency. My fifth one is 401k, but if your company offered a match, put it in the very first before paying your debt, because that is a free money. But if your company will not pay any match, just put it on number 5 after saving an emergency money. So number 6 is open an IRA. If you paid your debt and you have already your emergency money and you have already your 401k, it's time for you to do the Roth IRA or an IRA. So if you have all this then it's time for you to do individual investment. Individual investment, again, it's a kind of normal investment that you can withdraw your money anytime, but be aware or be careful of the short term or the long term tax or capital gains. Capital gains are if you buy a stocks or and invest money more than a year, that considered as capital gains. So there are taxes bracket for that one. But if you will sell your investment under your individual account under 1 year, that considered as income tax. So there's also a bracket of that one. How much depends on your income or your annual income. Okay guys, I hope you learned today my so-called road to invest retirement. So again, this is Rutsel, and see you on my next videos. I hope you learned a lot for today's topic, and see you on my next video guys, and be safe, and please watch, subscribe, likes and shares, and hit that notification bell so you'll be notified every time I have a new videos. And again, I'm here to inspire you guys, like if I can do it, you can do it as well. Okay, have a safe day and be careful, and again, find your way to happiness, because nothing can replace happiness. Bye bye. God bless.